More than 500,000 of you tuned into our weekly dividends video from last year, earning that dividend cash flow every single week. That portfolio has produced a 3.6% dividend and an outstanding 41% price return in the last year. But now I'm updating it with an even better list of dividend stocks, one with an average 5% dividend and double-digit returns. In this video, I'll show you how to create a weekly dividend stock portfolio, how to find when a stock pays dividends, and how to pick the best. I'll then reveal those 12 best dividend stocks to buy for cash flow every single week. Better still though, I'm including 2 monthly dividend payers in the list, which means you're going to double your dividends in the last 2 weeks of the month. And stick around because towards the end of the video, I'll show you exactly how much to invest to make $100, $200, and more every week. Before we get started though, you know I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now nation, we all know that cash flow is king for investors. Dividends have accounted for 42% of the total market return all the way back to the 40s, so if you're not getting paid while you invest, you are missing out. But it is even more important when stocks get expensive and prices weaken. The price to earnings ratio for stocks in the S&P 500 is now 28 times. That's down from the recent peak, but still 40% more expensive than the 10-year average. And that has meant a roller coaster in stock prices over the last 3 months, with stocks crashing more than 5% in September. But while stock prices are looking weak, dividends have never been stronger. Companies raised their dividend payments by 26% in the second quarter, boosting cash payouts almost to pre-pandemic levels. Companies are booking record cash flow, still not spending that money on growth though, and are going to start sending that cash flow back to investors through higher dividends no matter what stock prices do. Now let's get into that list of dividend stocks, and I'll show you how I found these and how to create that cash flow portfolio yourself. How this works is I found 12 dividend stocks that pay out in different weeks every 3 months. For example, our first stock here, Bristol-Myers Squib, pays out in the first week of January, April, July, and October. Another on the list, Kinder Morgan, is going to pay out in the first week of February, May, August, and November. So then putting these stocks together strategically like this into a portfolio makes sure you're never more than a week away from the dividend payment. And our first stock in the portfolio for your first week's dividend in January, April, July, and October is from Bristol-Myers Squib, ticker BMY. With all the attention on COVID this year, it can be easy to forget that there are other drug makers besides Pfizer and Moderna. Bristol-Myers is a $131 billion market cap with strong portfolio in hematology and a safe 3.3% dividend. The company has multiple blockbuster drugs out there, with 3 that do more than $1 billion in sales each quarter. Sales were up 10% in the third quarter, and the company's pipeline includes some underappreciated potential here, with 7 drugs in late-stage testing right now. Now, I like Bristol-Myers because it's not quite as heavily indebted as a lot of these other pharmaceutical stocks. It owes net debt of just $30 billion, which is about a quarter of its market cap. And the shares go ex-dividend early in the month, so you're going to get that payment within the first week or quickly thereafter. That 3.3% yield is less than the average for our list, but it's grown by 6% annually over the last 5 years. Paying its dividend in the second week is going to be AT&T, ticker T, with its 8.4% dividend yield. Now, all you out there in the nation know I have not always been a believer in AT&T, and in fact, I warned investors about the stock price and the dividend in 2018, but this is still the largest communications company in the world, and the valuation is now looking pretty attractive. Third quarter earnings showed a rebound in wireless business along with growth in its streaming service. Management is finally owning up to the mistakes in its prior strategy, and the shares trade for just 7.4 times on that price to earnings basis. Now that's a 25% discount to the valuation on competitor Verizon, and Wall Street has shares up 24% to the average target price. So even if we don't see all that price upside, that 8% plus dividend yield is consistent, and you know you're always going to get that dividend check around the second week of those 4 months. And we're coming up on our first monthly dividend stock next, but I want to make sure you know how I found these and how to use this strategy to create your own weekly dividend list. Now this all starts with the fact that most dividend stocks pay out each year on extremely consistent schedules. Dividend investors love that certainty and the consistency, so directors of these companies try to declare and pay those dividends on the same week every 3 months, some even down to the same day. So you can put together a list of your top dividend stocks, or just do what I did and research all 360 stocks in the S&P 500 that pay dividends. You then go to a site like Yahoo Finance, and you can go to the stock, and here I'll click on the Historical Data tab. I can change the time period to the last 5 years and then show dividends only and click apply. So the site here is going to show me the ex-dividend date for every dividend payment on the stock over the last 5 years. And you can see these are consistently the same time during the same months. For example, AT&T consistently has that dividend date towards the end of the first week in January, April, July, and October, and that's going to be paid out in the week after with that ex-dividend date listed. Then it's just a matter of getting all this into a spreadsheet like I did here, noting when each stock goes ex-dividend. Once you have that list of dividend stocks, you can plan it out like I've done for this portfolio. You pick your dividend stocks according to which are going to provide those payments in different months and different weeks. Now that dividend schedule is important, but it's not the only thing. So I'm going to show you in a minute how to pick your dividend stocks so you not only get that weekly cash flow, but also strong price returns as well. Next on our list for week 3 dividends is oil and gas producer EOG Resources, ticker EOG, and its 3.1% dividend yield. Now, EOG is a poster child for why I like energy stocks heading into next year. These companies are seeing massive cash flow on oil prices, but not yet spending that money on new exploration assets. And that's translating to that huge investor cash return. EOG increased its dividend by 82% this year and has returned $2.7 billion to investors. It's paid out 2 special dividends and is updating the share buyback program. And even after the shares have doubled in the last year, analysts have an average target of 15% upside plus growing that dividend. This one goes ex-dividend mid-month, so you're going to get that payment shortly after, and watch for those special dividends to keep coming on those shares. AG&C Investment Corporation, ticker AG&C, is a popular stock for dividend investors with an 8.9% yield and a good bet in that MREIT theme. Now, AG&C holds a $103 billion investment portfolio with $99 billion of that in agency mortgage-backed securities. It's basically borrowing on those extremely short-term rates, leveraging that money up, and then investing on longer-term mortgages. Now that's where it's able to take a spread of maybe 2%, the difference between its borrowing rate and the investments, into a 9 or a 10% return. And here, book value is really the measure you want to use when you're valuing these mortgage REITs. And it hasn't been pretty for AG&C, now at $16.41 a share. Now that means the shares are trading just under book value, which is a pretty good place in terms of value. And one bright spot though is that the net interest spread. Now that's the difference between the interest rates on the investments minus the short-term rates on which the company borrows. That spread has increased over the last year, and the company is hedging on many of its products, so it should be able to continue that profitability. Now, AG&C is popular though because it pays that high dividend on a monthly basis, usually around the 4th week of the month. The dividend amount hasn't moved much over the past 5 years, but it's hard to argue with a 9% cash return. And we're just getting started, but I want to get your input on this as well. And comparing this dividend stocks portfolio with the one last year, which one do you like better? Now, last year's list was filled with older companies, safer dividend yields for that 3.6% average, compared to the list this year with higher payouts of 5%, but maybe not quite as stable. Which one do you prefer though? So I'll leave a link to the other video below, but let me know in the comments which of these dividend lists do you like better and why. Our first stock in the February, May, August, and November period, paying your dividend in the first week, is the pipeline operator Kinder Morgan, ticker KMI. I've watched Kinder Morgan for years, but really got interested last year when founder Rich Kinder went on a buying spree, snapping up more than 1.5 million shares for just over 11% of the company. Now, Rich has talked about taking the company private in the past. Hasn't done it yet, but it wouldn't surprise me in the least. The company owns more than 80,000 miles of oil and gas pipeline across the United States and draws constant fees from the oil companies to use those assets. These are cash flow assets, and with energy prices back up to multi-year highs, this is one of my favorite dividend stocks. Distributable cash flow is expected at $5.4 billion this year, and the company has a $2 billion share buyback program that's also boosting the price. And what makes energy stocks like this one a favorite of mine, even after that massive bull market this year, is that many of these companies still haven't ramped up their spending. And they've got an eye on that long-term demand for oil and natural gas, so they're not spending the billions that they used to for new exploration or their pipelines. That means with higher oil prices, the cash is just rolling in and it's being paid out to investors. This one goes ex-dividend in the last days of the month, so you should be receiving that dividend about a week or two later. That 6.4% yield has grown by an impressive 21% annually over the last 5 years and should continue to grow on those high oil prices. The stock chart for Vornado Realty, ticker VNO, looks absolutely awful, but valuation is hard to pass up here, and I think this one surprises next year. Now, office space has been slammed over the last year, and most people aren't expecting it to get anywhere near the demand that we saw before the pandemic. That's bad news for office real estate owners like Vornado, but I'm not sure the death of office is quite here just yet. Now, Vornado owns premium office space in New York, San Francisco, and Chicago with a book value of assets of $26.80 a share. Now, that puts its price to book value at just 1.7 times, less than half the average multiple back in 2019. Now, occupancy rates are improving, and there will always be demand for office space, especially in these high density markets. Revenue was up just 1.5% in the first 9 months of the year, but management was able to turn that into 6.2% growth in funds from operations, so a strong trend in profitability. Now, this one goes ex-dividend early in the month, so you should collect that 4.6% cash yield around the second week of February, May, August, and November. We're halfway through our dividend stocks portfolio, and I'm going to be sharing that other monthly dividend payer next, but I want to give you some criteria for picking these stocks. With more than 350 dividend stocks in the S&P 500 alone, you'll have plenty to choose from to create that weekly cash flow. So you can be picky here, only buying the very best dividend stocks for yield and return. And a big part of that is recognizing that it's not all about the dividend yield. If 42% of the total return on stocks is from dividends, that means another 58% has been just from the price returns. Just chasing those highest dividend yields and ignoring returns means you're also missing out on the big part of investing. And now, of course, you can get all technical here and calculate those returns, or you can just go easy and check out the price chart to make sure that the stock is producing those positive returns. For example, with shares of Crown Castle, you can see that not only do you get that 3% plus dividend yield, but the stock has doubled in the last 5 years. We talk a lot about that fundamental analysis here on the channel, like the price to earnings ratio and other valuation measures, as well as comparing stocks by their operating margin, but I want to get back to that list, so I'll just link to a few videos on the stock analysis below. And one last thing I'll say though, for creating your dividend list, make sure you're diversifying companies by sector as well. This means making sure that you have stocks from at least a few of the 11 stock sectors, those broad groups of companies in topics like technology, utility companies, and materials. And making sure you have companies from at least 5 or 6 sectors means you protect your portfolio and your cash flow from any single event that destroys a particular group. Gladstone Capital, ticker GLAD, is our second monthly dividend payer, so you're going to collect 2 dividend payments in the third week of each month. And Gladstone is a business development corporation, which means it makes loans to mid-sized companies that need more than a regional bank can provide, but not quite enough to tap the public markets. So these BDCs are cash flow businesses like a bank and pay really strong dividend yields. And one thing you want to watch for in these BDCs though is what's called the weighted average portfolio yield. Now that's the average interest rate a BDC makes on its loans, and you want to make sure that this is above the dividend yield as a measure of that dividend safety. For example, Gladstone has a portfolio yield of 10.5%, which is well above that 6.6% dividend, and means not only that cash payment is safe, but there's also room left for growth as well. Now, Gladstone pays a monthly dividend that hasn't changed much lately, but it's tough arguing with a 6.6% yield and that 42% price return over the last year. Newell Brands, ticker NWL, is going to be our week 4 dividend for a 3.8% yield. Newell owns some of the biggest names in consumer goods like Rubbermaid, Coleman, and Papermate. It's not a high-growth market, but the company has a leadership position in many of its products. The company is just starting to see the benefits of its turnaround strategy, lowering its operating costs and speeding up the cash conversion cycle. That should translate into stock returns over the next couple of years, and analysts have an average target price of 15% upside. The shares go ex-dividend in the last week, and the dividend has grown by almost 5% annually over the last 5 years. We've got 4 more dividend stocks left, but first, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, trends, and strategies you need. It's absolutely free, just something I like to do for all you out there in the community, so look for that sign-up link in the video description below. Our first stock in the March, June, September, and December period paying out in that first week is Newmont, ticker NEM. Newmont is the world's largest gold miner, producing over 6 million ounces of gold annually, and has the production pipeline to do it through 2029, so an excellent long-term play on gold. With inflation hitting multi-decade highs, gold could be one of the best investments in 2022, and Newmont is primed to take advantage of that. Reserves top 96 million ounces of gold, the most in the industry, plus 63 million ounces of copper and silver. The company benefits from its size advantage and has been able to lower its all-in sustaining costs to $1,000 an ounce, and is forecasting lowering that to just $850 an ounce over the next few years. And it is hard to argue with that success here. Newmont has returned over $2 billion in dividends and buybacks over the last 18 months, and and has produced a four-fold return over the last 5 years. Shares pay a 3.9% dividend yield and usually go ex-dividend early in the month. Better yet, management has rocketed the dividend payment tenfold over the last 5 years, and the average analyst target is a 70% upside. Iron Mountain, ticker IRM, is another popular dividend stock for its 5.2% yield and solid price returns over the last year. The company is the leader in physical record storage with more than 730 million cubic feet of warehouse space globally in 58 countries. It's pretty much the go-to for hard copy records, but it's also made that transition into data center and digital storage for about 25% of its sales. Now understand, IRM is not where investors go to get rich. Records management is a slow growth industry, but a stable one with about 2.5% revenue growth each year. And the upside to this is that slow growth keeps out any competition and makes this a safe cash flow stock. Iron Mountain has a 98% customer retention, and it's committed to that dividend. The shares go ex-dividend around the second week of the month in this group, so you'll probably get that one mid-month, but it's grown at a stable 3% annual rate. Now, paying your dividend in the third week here is going to be Crown Castle International, ticker CCI, and its 3.25% dividend yield. CCI is a leader in connectivity with 40,000 cell towers, 80,000 small cell nodes, and 80,000 miles of fiber cable. Now, these assets are going to be vital as internet and smartphone bandwidth demand booms over the next few years. Between the adoption of 5G, the Internet of Things, where everything you own is connected to the net, and the push to smart cities, this company owns the assets that are going to make that happen. And while CCI still has those legacy towers, it's also been aggressive at building out that small cell nodes business, which costs about a fifth to set up and produces higher returns. So I like to see growth in this part of the business. The stock goes ex-dividend around mid-month, and you're going to receive that in your account shortly after. It's another lower yield at just 3%, but the company has grown that dividend by 8.8% a year over the last 5. The average analyst price target is a 10% upside from here for a stable cash flow business. Our fourth week dividend here is Broadcom, ticker AVGO, a world-class chip maker paying a 2.6% dividend. Through acquisitions, Broadcom has patched together one of the broadest leaderships in tech, from smartphone components to wired infrastructure to storage and semiconductors. So if you want one tech stock that is going to benefit from the strongest trends in robotics, Internet of Things, and 5G, this is it. What I really like about this company, besides the catalyst that I'll highlight next, is that not only is the company growing sales at a solid pace, it's learning how to be more efficient to boost its earnings. And sales grew by 5.7% last year, but the company was able to grow those operating earnings by 8.5%, which is an amazing spread given Broadcom's size and recent acquisitions. Now, the release of the Apple 5G should help boost sales, and many of the company's products are primed to benefit from that work-from-home trend. The big catalyst here, though, I think could be that transition to 5G. With that new 5G technology, you can get thousands of devices on a local network versus maybe just the dozens of devices you could cram onto a similar 4G network. That's going to drive that IoT revolution, but it also means network congestion and a spike in demand for the kind of RF filters that Broadcom excels in. That dividend is going to hit around the fourth week of the March, June, September, and December period. And even though it's only a 2.6% yield right now, the company has grown it at a 37% annual pace over the last 5 years, so definitely one that continues to grow. Here is that entire list of dividend stocks, 12 stocks that will produce that dividend check every week of the year. Now, this dividend portfolio is going to produce a 5% cash payment with extra payments in the last 2 weeks of the month from those monthly payers. Remember, these are only approximate payment weeks, but they're pretty close, putting cash in your pocket every single week. Now, by far, the most asked question on the last video was, how much do I need to invest in these to make $100 or $200 a week? So I wanted to show you exactly how much to invest for that weekly cash flow. And here, it's actually pretty easy to find the amount you need to invest. Just take that amount you want each week. So let's start here with $50 and then divide that by the dividend yield. You can do that for an individual stock, or we'll use the portfolio average for our 12 stocks of 5% dividends. So $50 divided by 0.05 gives us $1,000 we need to invest. But now that dividend yield is always shown on an annual percentage. So if we want to make that much each week, we have to times this amount by 52 for weeks in a year. And that means at a 5% dividend yield, if we invested $52,000 in stocks of this portfolio, we would earn that $50 a week. And then doing this for other amounts here, an investment of $104,000 across the portfolio, say $8,600 in each stock, would pay $100 a week on average. Now, that kind of sucks because it's out of reach for a lot of people, but don't forget, that doesn't include the price return. Remember, we're up 41% on last year's portfolio, so you would have made thousands besides those dividends. For example, on that 3.6% dividend yield for last year's stocks, you would have made just $360 in dividends on a $10,000 portfolio. But you'd also be up more than $4,000 on the value, giving you another huge source of income. Click on the video to the right to see how to create a dividend ladder that will pay your rent and the 5 dividend stocks to do it. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.